how to change your Roth IRA that Quincy just showed you how to open from $5,000 to 100, and actually that's wrong. It should be 180,000. Sorry about that. In 1 year. So basically, you have a choice. You can pay income tax on the seed or on the harvest. Which one would you prefer? The seed. So the first thing you have to do is open a Roth IRA at Quest. And these people, I mean, the reason I'm showing you this presentation today is I learned a lot of this stuff from Quest IRA. How many people have an IRA company that teaches as much as Quest? Nobody does. So you can't win the lottery if you don't buy a ticket. So the best way to make money, if you think about all the companies that are just killing it out there, Amazon, Uber, Airbnb, what are they doing? They're connecting consumers to suppliers, but they're solving problems, right? So basically by turning other people's problems into, I don't like calling them problems, I like to call them opportunities, you can make a lot of money. So this is the first opportunity. This is from elliemay.com. It shows that of all the people that applied for a mortgage in the month of June, they haven't published July yet, 70.5% received a mortgage. That means almost 1 out of 3 people in this country is turned away. So now this is from Tucson, Arizona. You want to see how many people got carryback financing last month? 4. Tucson is a city of 1 million people. So do you see that? A third of the people are being turned away, but 4 are getting financing from the seller. Anybody see a chance to make some money there? So the next opportunity. Every day in this country, 10,000 people turn 65 years old. Tomorrow it's 20, the next day it's 30, end of the week 70, right? That's 3.6 million people a year. They're looking around at Wells Fargo. How much are they paying? 0.2%, right? There's this huge supply of money looking for a better home. And the stock market's getting scary, and as all these people stop putting money in and start taking it out, the stock market over time, over the next 10 years, isn't going to be looking nearly as well. And then this third opportunity is sellers, when they sell their home in a traditional manner, they lose 12% of the equity. They're going to pay commission, closing costs, buyer closing costs, and repairs on that home. So far we got 3 opportunities. We got buyers that can't get a house, we got retirees that can't get a very good return, and we've got sellers that are having to pay way too much money to sell their home. So my solution to solve all 3 problems, I walk in and say, hey, Mr. Seller, instead of $88,000, how about I just write you a check for $90,000 and you just tell me the day you want to cash it? How many people do you think the seller would take that deal? More money, less time, and no hassle. You pick the day. So now I can buy a $100,000 home that other people are having bidding wars over for $90,000. Okay, I can turn around and sell that home with financing. I've added value by adding financing. So I can sell that home for $10,000 to $15,000 over the market, not over what I paid. Remember, I bought it $10,000 lower. I can sell it for more than market. So basically, on a $115,000 sale, I bought it for $90,000. I make a $25,000 profit. How many people are real estate agents? Okay, how much would you make selling that $100,000 home? $3,000? I like $25,000 a lot better. So let's look at how this deal is structured. You have a down payment of $15,000, a first position note at $70,000, and a second position note at $30,000. Why do I break the note in 2 pieces? Because it wouldn't be very secure for the retiree to invest $100,000 on a $100,000 home, right? So is it a pretty secure investment for that retiree at $30,000? Okay. So I take $30,000, they do $70,000. The buyer puts down $15,000 cash. Is that pretty good skin in the game? Okay, the retiree brings in $70,000. So far I have $85,000. And I apologize, the slides kind of shifted a little bit, but you can follow. So now I got a homeowner that said they would take $90,000. How much do I have right here? $85,000. How much more do I need? $5,000. What do I get for my $5,000? A $30,000 note. Anybody want to do that deal? So now, let's look at where it comes from. The $30,000 comes from your Roth IRA. You pay $5,000. So that gave the homeowner the $90,000, which is more money than they would have got on the market. Gave the buyer a home nobody else would let them have. Gave a retiree a 7% return instead of a 0.2% return. And it gave me an investment that's worth $30,000 that I paid $5,000 for. Is that a pretty good win-win-win-win-win deal? And by the way, I forgot a win. The neighbors love me because I just drove the price of their neighborhood higher, right? So now, here's the term, and this slide's a little bit screwed up, But basically, it's a $30,000 note at 8% interest for 360 months, and that's a payment of $220.13. So now, my yield, because you can't see this very good, but my yield, because I only paid 5, isn't 8%, it's 52.8%. Everybody get that? Because I bought it for 1/6 of its value. So the bottom line is that sustainable? Can you sustain a 52.8% yield? And I'll tell you, it's not sustainable. It's going to be a lot higher. Because you bought that, all the 52.8 is the return you're making on the payments. You bought that note for 1/6 of its value. Someday when they pay out, they're going to give you 600% return on the money you invested. So more than likely, that's going to happen between 5 and 7 years. So on a $30,000 note for $5,000, it takes you 22.7 months to double your money. You get all your money back in 22 months. It's a 30-year note, right? If you're a real estate agent, your commission, if you took this note instead of commission, it would take 14 months to get your commission. You would be paid your commission every 14 months for 30 years, right? This is the kind of stuff I teach on my webinars. So now, anybody that you want to talk to that's got a booth out here, they found one thing in the market that worked, and they just keep repeating it over and over and over. That's a recipe for success. Find something that works and turn the crank. So what if you're a hoarder, a note hoarder, right? So you put the $5,000 in your IRA, and then you get a $30,000 note. Guess what? You're done. Your money's spent for this year. You wait till next year, you put in $5,000 more. Do it again, do it again, do it again. Not a bad deal. After 5 years, you put in $25,000 and you own $150,000 worth of notes. Is that a pretty good deal? But what if you want to turbocharge it? So what if I sell that first note? You think I could sell that note for $20,000 and give the person that bought it a 12.9 yield? How many people would take that deal? I mean, every hand in this room should be up. So now basically, what did I just do to my Roth IRA? I put one deal in, and I paid 5 for it. It was worth 30. I sold it and got 20. I just made a 400% return in a week. Now, how many deals can I buy? 4 more, right? So I take the $5,000 deal that's worth 30, turn around and sell it for 20. That 20 gets me 4 more deals. Everybody follow? Those 4 deals are now kicking out $220 each, which is $880 a month, which means every 6 months my IRA is buying another deal. So at the end of the first year, I own the 4 that I traded my $20,000 for, and the interest for the next 2 6-month periods got me 2 more. I end the year with 6 $30,000 notes. It's $180,000. How much was my investment in my Roth? $5,000 bucks, right? Is this doable? How many people can find 6 deals a year? And if your hand isn't up, look around for the ones that are, because that's your deal flow, right? I mean, you partner with people. Would it be a bad thing to split that note with somebody and each of you put $2,500 in it? It'd be awesome. So what if you did this for 5 years? You did 6 a year for 5 years. You would own $30,000 notes. That's $900,000. And you would have put in $25,000 to get that $900,000. So all those people that are in their 50s, 60s, and 70s and kind of forgot to save for retirement, this is your exit strategy, right? It's not too late. The cash flow. The number on the right-hand side in the blue is how many notes your notes would buy every year. So actually, if you did this, your notes would be buying, by the 5th year, you'd be buying 15 notes a year. So you'd end up with 45 notes worth $1.3 million, paying $2,284 a week, not a month, a week, in the next 5 years with $25,000 invested. So how many people think the loan's going to go for 30 years? We know most Americans are going to move 5 to 7. When they do, this is what a note looks like. I got this chart from Eddie Speed. And I didn't go home that night and go to sleep until I figured out how to make it. So basically, in the first 5 years of this note, the buyer would pay off $1,479 of the $30,000 they owe you. So not only would you have made $13,200 in payments, they would still owe you $28,500 at the end, which means your $5,000 investment makes $41,728 in 5 years. So 45 of those notes would get you $594,000 worth of payments, reducing the principal by just $66,000. And if all those notes sold out, you'd have $1.2 million. So change your outcome. If you're tired of the big banks making huge profits on your money, you can become the bank. And let's get this little banker kicked out of the way here. Boot the bank, keep the profits for yourself. So first action, get a Roth IRA. You can't win if you don't buy a ticket. Second, get on. This is my conference in Tucson, Arizona. 3 days of learning how to do this step by step, starting with the marketing, starting with how to partner with people. The last day is a half day. We're going to do accountability. You're going to find a partner, write down your actions, and keep you accountable for making it happen. Go to notebusinessbuilder.com to find out more details. All the money from this conference goes to Make-A-Wish. We got to send this little girl to the Thanksgiving Day parade last year, Macy's. And this is the check from our conference that we generated last year. If you'd like to read, this book is going to be out next week. It's Who Needs the Bank, and it's a leave-behind book for all the investors that you talk to. You open their mind. Every chapter ends in a question mark, so it's all the questions they would ask. What if they don't pay? Aren't these people deadbeats? Anybody that's interested, I do a webinar every Tuesday. If you'd like to get on a couple webinars and see what we're talking about, there's my contact information. Send me a text. I'll add you to the next couple weeks. That's all I got. Thank you, guys.